Hi traders, and welcome to my video on the buy sell volume indicator. In this video I'm going to show you a simple strategy that you can use to capture moves such as this one for around 300 pips. Okay, so I'm using the MT4 trading platform, the MetaTrader 4 platform, and this is a US dollar Canadian dollar 1 hour chart. Okay, I like to use the higher chart time frames such as the 1 hour, 4 hour, daily, weekly, and monthly, simply because they contain more price data and therefore, from my experience, give more reliable signals. This applies not just to technical indicators but also price action such as support and resistance, trend lines, candlestick patterns, so on and so forth. Okay, so the first thing we need to do is we need to establish the trend direction. Okay, so in this chart we clearly have a downtrend. The market is making these lower highs. Okay, we had an area of resistance up here. Price is moving away. Okay, there was this support level here. Okay, we have this level of support tested, then a breakout here, and a move to the downside. Okay, chart pattern formation there as well. We do have more immediate resistance here, as well as the market making its lower highs there, sort of a wedge formation, a breakout to the downside. So this could have been a potential entry opportunity there. That's without even needing the buy sell volume indicator. As I said, it's a 1 hour chart, so there's plenty of price data where I do find that the support, resistance, and trend lines tend to be reliable anyway. Had we have taken this breakout, we could have placed our stop loss above the high here, so around 10 pips, which is really tight for the 1 hour chart time frame, and have over 250 pips profit potential. Perhaps using a trailing stop, while certainly using a trailing stop on the way down. So as price fell, I just moved the stop loss from above this high to above this high, 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 and that way we can maximize the move as much as possible. So when price does turn around and we start to see these high lows, okay, then we can look to either manually exit the position or a trailing stop will take us out. You can, of course, close part of the position on the way down if you want to bank some pips, but main thing is good money management so that we cut losing trades short, let winning trades run. That way we don't have to be right all the time, because we know when we do eventually catch a trend such as this one, we'll make back any losses and then some more on top. Okay, so where does the buy sell volume indicator come into this, I hear you say? Well, don't worry, I'm going to get to that now. So if I just zoom in for you, you can see the buy sell volume indicator here. So basically the higher it is, the higher the volume. Simple as that. Okay, why is this important? Well, because it can tell us if the market is trending or ranging. Okay, so if the indicator is low, so down and around here, there's a higher chance that there's going to be a range. If I just pinpoint, let's just mark a random low. So here is low. Okay, you can see where it's low down here, up till around there, and it shoots up. So this area here, you can see it's quite relatively low. And then if you look at the chart, it's more of a range, okay, there. So that's one thing to look for. If it's low, it can signal a range. I mean, if you're range trading, you might use it to help you identify ranges and then just look to pick off the highs or the lows of the range. I'm a trend trader. As they say, the trend is your friend. So I want to capture big trends. I'd rather catch a move like this for a few hundred pips and try and catch a few pips on a reversal within a range. And this can make life easier. So for trends, the buy sell volume indicator, what I would do is I would look for a spike. So we can see a spike here. Okay. And this usually signals that there's significant movement. Okay. And then you can see following on from that spike, we had this drop here. Okay. And then we can look at the chart. We know that something's happened and we can see that that's a trend. And then what we do is we just wait for a pullback. Okay, so ideally a pullback when the price is low, around there when the volume is low. So one could argue a pullback there and a breakout, or a bigger pullback here. Okay, as I said, the overall picture is that if I just delete that and that, we know we're in a downtrend. The market's making these lower highs. Okay, so we can draw our support based on the pullback and just trade a breakout there. When the buy sell volume indicator is low is a good time to start looking for a pullback. Okay, and then as it peaks up again, Here you can see that coincides with that big movement down because the volume's increasing. That would have been a good time to time our entry into this particular downtrend. Okay, if we just move along, wait for that spike again. So we have the spike here, follows on from this downwards move. Okay, and then we can just draw our level. Okay, and you could trade a breakout of this area here. You can see the support, then comes resistance. This is not a bad area to get into this downtrend. Okay. Moving further on. Okay, again, when it moves up, there's been some movement, whether that's down or up, it doesn't matter. We're just going to look for the movement in line with the trend. We're going to draw our support. We know we're going short because we can zoom out. We know we're in a downtrend. So we're only looking for short trades. We're not going to go long. We're not going to buy against this downwards move. So we can just wait for a spike in the volume from the buy side volume indicator. And after we have that spike, we can just look to draw a support level and trade off that. Okay. See a nice breakout trade there. Again, big spike coincides obviously with the volume from that big candle down there and this big move. So when we have the big spike, wait for a pullback, draw support, and again you could have entered on the breakout there and still caught some more on this downwards move. Being cautious not to sell, too low. You don't want to sell out the low, especially when we had ample opportunities to enter throughout. Okay, one thing I will say is I wouldn't have needed the indicator to take any of those trades personally. I don't think it's necessary. I mean, if we just break it down to the basics, you're just looking for a trend downwards in this instance, a pullback, and then just trading on the breakouts from the pullback. I mean, there's a pullback, there's a pullback. Some may argue this is a pullback. See this support level here? Support level, breakout, support then becomes resistance. That's no coincidence. If I just zoom in on that view. This support level there in this downtrend, it held, then there was a breakout, and as soon as it was breached, it became a resistance level. So either entering on the breakout or a pullback to the resistance. If you're a more conservative trader, ample opportunities to enter. Same scenario here. You had the pullback, draw your support, breakout below, either enter on the breakout or on the pullback to the support come resistance. Here, strong level of support, tested, breakout there. So entry possibilities on this line, resistance as a reversal, support come resistance, or a breakout of this support level. Either way, ample opportunity to enter into this downtrend. And again, nice channel there. Could have traded a breakout of that channel. If you were trading the range, you can see that the volume is low, so some traders may have been trying to pick off the range there. So that's basically how I would trade using the buy-sell volume indicator. If we just try and find a long example, so buying example. Here we can see the market is in a clear upwards trend. So what do? We wait for the spike. Okay, so we have the spike here, then the pullback. We draw our resistance in this instance because we're trading long, we're buying. Okay, and in fact, this is a strong level of resistance. We can see it's been previously tested here and here, and we can just enter on that breakout there. Resistance, then comes support. So whether you enter on the breakout there or the pullback to around this level here, either option is fine. Just be careful if you're going to not trade the breakout and wait for the pullback to the resistance comes support, or vice versa in a downtrend. There's a chance they won't actually come back to the line, so you might miss that opportunity. Okay, but more often than not, you can still capture big trends on a breakout of a pullback. In this instance, I would have placed the stop loss just below this low here, so you're looking between 10 and 15 pips, which again is relatively tight for the 1 hour chart time frame. Profit potential of over 300 pips. Well, and the rest. I say 300 pips because if we were using a trailing stop as the price is moving up, I just would have moved my stop loss from here to break even. Then I would have just moved it along these lows all the way up. Okay. So keeping it below the lows, all the way up to around here, and we may have been taken out at this point. still would have been a good trade for around 250 pips minus broker fees. And you can, of course, re-enter as well. Okay. And you see this breakout, this downwards momentum, but then a breakout to the upside. We're back and rolling on the uptrend. Market's making these higher lows. We apply the same principles. We wait for the spike in volume, spike here, have a look at our move. This is perhaps a bit aggressive entering this early into the trend, although we know overall perhaps just zoom out, we're still riding this trend really from all the way back here. So we would have wanted to get in ideally earlier on. And had you missed that opportunity, I mean, you can use this strategy on any trading instruments, so Forex, stocks, cryptos, commodities, indices, etc. So you don't need to force trades that aren't there, any instrument, any time frame. But if you did miss this one, you just wait again for the spike in the volume, as you can see there, coincides with this level, then just draw your resistance. This resistance then comes support, identical entry really to this, either trade in the breakout or the pullback to the resistance comes support. Okay, so level spikes up again here. Wait for the pullback, draw your resistance, resistance becomes support, continuation. Same here, spike up there, coincides nicely with that resistance. And we can trade the breakout there. Okay, and again here, don't want to buy too high. Okay, you want to try and get in as early as possible. Don't want to buy high and sell low. Okay, and capturing a few big moves like this, hundreds of pips available. As I said, if we've got tight stop loss, we can afford a few losses here and there. Just make sure we maintain good trading discipline, so don't let negative emotions like fear, anger, and greed blind our trading decisions. Don't revenge trade, don't get FOMO, fear of missing out. Okay, and yeah, you can build a solid strategy with trend trading, using breakouts and pullbacks, the volume indicator to help you identify these areas as well, and longer term chart timeframes, in my opinion, can tend to give more reliable signals just because there's more price data included within them. Hopefully you found something useful in this video. I do appreciate you watching. If you could like and subscribe, that would be great, and I hope to catch you on the next one. Take care.